Welcome back to Financial Accounting Info. In this video, we want to look at the preparation of the income and expenditure account. So this is the question that we have. So we are going to see that we're going to read the question and then we answer what is required. So the question read the information given below was extracted from the books of Southern Sports Club on 30 June 2015. And then on the required part, it reads draw up the membership fees account in general ledger and then close off this account on 30 June 2015. So we are not going to concern about 5.1. 5.1, we prepared the membership fees account in the previous video. So we are just going to go to 5.2, which reads prepare the statement of income and expenditure for the year ended 30 June 2015. So we are going to go through the question and then we prepare the statement of income and expenditure. We will see that this question is got 21 marks. Very important for us to take note of that. So beneath that, now we're given the information whereby we are given information A, which reads the following balances or totals amongst others appeared in the books on 1 July 2014. So we're given the opening balances there that we have at the beginning of the period. Then our information B, we're given a statement of receipts and payments as of 10 June 2015. So this is the receipts and payments account that we're given there. Then we go to the next page to see what actually do we have there. So if you look at it, we have got we are given the additional information now, that is information C. So you can go through the additional information before you start to answer the question from this point down to the last point. So we go to our answer section. We go to our answer section. You see that we have the statement of income and expenditure for the year ended 30 June 2015, and this was Southern Sports Club. So in the income and expenditure, remember what we are just going to do is to first of all have our income. And then the total for income is going to come here. And we are going to list all the incomes that we have in the question. But obviously, we are going to start with the income that we got from our first part of the question, that is 5.1 on membership fees. Remember, 5.1 requires us to prepare the membership fees, but this membership fees, we prepared it in the last video, so we can just maybe go down to check when we prepared it, the amount that we got. So when we prepared this membership fees account in the last video, this is what we prepared, and what we got is 26,400. So this is going to be income coming from membership fees account. So we are just going to enter that amount in our income and expenditure account under income. So here we are saying the amount that we are having, and we're going to put it in the first column, whereby we are going to list all the incomes, and obviously the total will go now to the next column. So we go to membership fees, we are saying 26,400. That's the figure that we are having. Then we go to the question to check other incomes that we are having in the question. So obviously, other incomes we can get them on the debit side of the receipts and payments account. Otherwise, we are seeing other receipts. So we come here to check other incomes that we can include there. So you'd see that we have legacy S Baba, which is this one, which is 1,000. So, but we don't have to enter this figure as it is under income. We have to go to additional information to see any adjustments, that is any adjustments affecting the legacy. So we go to additional information, but now we know that the amount that was total amount received is 1,000. So we now want to know what actually belongs to the current period. So we go to the additional information and try to see explanations about the legacy. So we start from the beginning, we go down, checking. Check if you've got anything that is affecting that. So if you come out to the third point here, you'd see that it reads 250 rands of the legacy must be used to subsidize current expenditure, while the balance must be capitalized. So what it means is the 250 is the one that is used to subsidize current expenditure is the one that is being referred to as we should include it under income and expenditure account. So we are just going to take the 250 as it is and put it in the income and expenditure account under income. So it means the remainder is going to be capitalized. So the remainder is 1,000 minus 250. and obviously you are going to get your 750. So this is the one that has been capitalized. So this one cannot fall under the income and expenditure account. So you take 250 and enter it as it is under income. We are now seeing legacy. Is Baba, and we've got the amount of 250. Then we go again under the income and under the receipts and payments to check another income that we can add. So after that, we've got entrance fees. We've got entrance fees and it's 3,900. So we go again. So we go and check all the additional information. If you have got anything that is affecting our entrance fees. So if you go there, you would see that let's try to see if you've got anything that is affecting our entrance fees. So if you come here, so you can go through all the points and try to see if you've got anything that is affecting our entrance fees. So if you come to this point, you'd see that it reads 3/4 of the entrance fees must be capitalized, while the balance must be used as current income. So the balance that is being capitalized, we should not include it under income and expenditure. So you have to calculate the balance and remove it from the figure that we're having for entrance fees, which is 3,900. So we have 3/4 which we should remove. So you go back there and check the amount for entrance fees, and then we calculate the 3/4. So we are saying our entrance fees is 3,900. So 3/4, we say 3/4 times 3,900. Then we calculate the balance that has to be removed. Calculate like that, you're going to get 2,925. So we are going to remove 2,925 from 3,900. Then the net figure is the one that we are going to include in the income and expenditure. So we go there. So we are now saying entrance fees. And in brackets, we just summarize the working way by saying 3,900 minus the one that is capitalized, 2,925. And then you're going to get your 975. And then we also go to the receipts part in the receipt payments and see if you've got any other income that is there. So after entrance fees, we've got get takings. Get takings, which is 8,050. So we also go to exchange information to check if you've got anything that is affecting our get takings. So we go from information one, the first point to the last point, checking for anything affecting get takings. You can see that we have got nothing that is affecting our get takings. So we can just take the 8,050 that we are given in the recent payments, account. So we come here, and we are saying get takings, and we've got 8,050. So this is what we have in terms of our get takings. So we have exhausted all the income that we have in the question. Then we can add now 8,050 plus 975 plus 250 plus 26,400. And the total that we are going to get is 35,000. 35,675. So we now go to the next section whereby we are now going to say less expenditure. So on less expenditure, we go to the expenditure section in the receipts and payments. We go to the payment section and then we check any expenditures that are listed under the payments section. So we are here. So we start with the first one, which is saying on honorarium, which is we've got a 700 there. And then obviously we go to additional information again to check if we've got anything that is affecting that ordinarium. We come here. And we try to see if we've got anything that we are seeing there. We go to the last point, saying the secretary's honorarium has not yet been paid, which is 300. So not yet been paid, it means this is an owing, or we can call it an accrual. So whenever I was an owing, you're supposed to add it. So you're adding 300 to the figure that you are given 700 in other payments, and then you get the total. So here we are just saying, we write it here. So you're saying 700, and then you add your 300, and then you get your 1,000. And then I will go and check the next expenditure that we have there. We now have stationery. So remember, stationery, this one represents stationery that was purchased during the period. So the one that was used is the expense. So you're going to say what was purchased minus what is remaining at the end of the period. Then you get the one that was used. So you're saying 210, and I will check the one that is there at the end of the period. We are being told that we have got 80. So you're going to say 210 minus 80. Then you get the one that is supposed to be under expenditure. So here we are saying stationery. And then we are saying 210 minus 80, then we get you 130. Then from stationery, we go again to check what else do we have. So from stationery, we've got affiliation fees here, which is 1,240. And then out of this affiliation fees, we go to additional information to check if we've got anything that is affecting our affiliation fees. So you'd see that we've got nothing, but if you come in the question again, you'd see that at the beginning of the period, there was affiliation fees that were outstanding, which is accrued expense at the beginning, which is 300. So out of the 300, if you go to the receipt and payments, you'll see that the total application fees paid is 1,240, which automatically means the 300 that was owing at the beginning of the period also was paid during the current period. So it's inside the 1,240. So according to the matching principle, what doesn't belong to this period, we should remove it. So this 300 is coming from, it's for the previous period, but it was paid at this period. So you have to remove it inside 1,240, so that we are left with the affiliation fees for this period only. So we go there and make that adjustment. So we are saying affiliation fees. Then we have 1,240, then you subtract your 300. Then obviously you're going to get your 940. We go again to check the next one. So under affiliation fees, we've got bank charges, 2,200. So we go to additional information to check if we've got anything that is affecting our bank charges. But if you go through, you see that we've got nothing affecting our bank charges. Then so it means we are going to take our 2,200 as our bank charges. Then electricity, there's nothing again that is affecting our electricity. So we're going to take it 960 as it is. Sundry expenses, we have nothing again as affecting our sundry expenses. So we are going to take 125. So we can go and list those expenditures. So we are saying bank charges, and the amount that we have is 2,200. And then we have electricity, and the amount that we have is 960. And then we have sundry expenses, and the amount is 125. So this is what we have. So we can go and check now if the in our recent payments and to see if we have exhausted everything. So to see that this is the last payment that we have, which is salary expenses. So even that, we go to additional information to identify other expenses that are not listed there. Remember, our additional information is starting here. We go down checking other expenses that might be stated. We have depreciation here. Depreciate equipment at 20% per annum on the straight line method. Remember, the straight line method, we say percentage times cost. So this is another expense that needs that is not stated in the system payments that needs to be added there. Then I will check the cost now of our equipment. It's given at the beginning of the period. So you see that our cost is 72,000 here, and the percentage that we are given is 20%. So we are just going to say 20% off 20% of the cost that we have. So the cost that we have is 72,000. Then we multiply by 20% to get the depreciation for the period. So here we are saying depreciation. Whereby we are saying 20% as a decimal becomes 0.20. And the cost is 72,000. We multiply there, you're going to get 14,400. Then also we check additional information, anything that is also affecting our income and expenditure. We have got this point which is saying membership fees outstanding for 2014 must be written off. So remember, these are membership fees written off, and they are supposed to be a credit loss. So we are supposed to also include it under our expenditure. So membership fees outstanding for 2014 must be written off. So let's try to find out which are the membership fees that are outstanding for 2014. But if you come at the beginning of the question, you would see that you are being told that we've got membership fees that were outstanding for 2014, which are here. Accrued income, which is our membership fees. 1,000 was outstanding. Then out of that 1,000, we see what was paid. Getting the system payments. What we received now for 2014 is only 800, but what was accrued is 1,000. So it means we say 1,000 minus 800, we get 200. So it means 200 is yet to be received. So that's the one that is being said must be written off. So it becomes an expense when it is written off. So the 200, we get it as an expense. Remember, they are saying must be written off. So in that sense, it becomes an expenditure. So we come here and say membership fees. Written off, and we're saying 200. So with that now, we can now add to get the total for expenditures. So we are adding from 200 going up to the first expenditure that we have, which is 1,000. So from 200 to 1,000, we add to get the total. So let's try to add, and then obviously the total that we are going to get will come here, and it will be 19,000 900 and 55. So it would come in line with expenditures here. So having done that, now we know that we are supposed to subtract this figure from the figure that we have for total for income. So we are saying 35,675 minus 19,955. Then also we should see that the income is greater than our expenditure, so we're going to get a positive figure. And that figure is going to be transferred to the accumulated fund. So we go there and put the net figure that we will go there by subtracting. Answer is going to be 15,720. So this is the final figure. In the description there is that we are transferring it to the accumulated fund. Basically, this is surplus of income over expenditure. So the surplus of income over expenditure is this one, 15,720, which should be transferred to the accumulated fund. So remember, the accumulated fund is the same as the capital in a profit-making business. Remember, these are membership fees accounts and income and expenditure accounts are prepared in a non-profit making organization or a not-for-profit making organization. But in a profit-making now, the accumulated fund, we use the term capital. So this is the essence behind accumulated fund. So whenever we have a surplus of income over expenditure, it's going to increase the accumulated fund. But if we have a deficit of income over expenditure, it's going to reduce the accumulated fund. So this is exactly what we have according to this video. So thank you for listening. Those of you subscribe, please subscribe. We are still coming with more videos as we prepare for exams. As for this video, I'm out. We'll meet again in the next video.